right. Welcome, guys. Welcome to Thursday live stream. Let's make sure my audio is working correctly. All right. Whoa, 5 likes. Let's go. Thank you, guys. If you guys haven't noticed, we're about to reach 400 subs on this channel. We've been steadily growing, so that's great to see. So if you guys aren't subscribed yet, make sure you guys hit that subscribe button. But on top of that, make sure you guys hit that notification bell as well, so that you guys know when I'm live on Tuesdays and Thursdays, and when I have uploaded a new video. And usually videos come out on Monday, Tuesday, Wednesday, and Thursday. All right. So we are really just steadily growing here. We've definitely hit a point of no return, basically, as we are starting to grow exponentially on this channel. So it's great to see that people are liking the content, liking the videos, the streams, and of course subscribing to the channel so that you guys are staying updated with everything that's going on. So hey Joe, what's up? Hey, what's up, guys? Welcome. All right, 6 likes. Let's go. All right, we'll begin in about less than a minute here. Let's make sure I have my water here. Okay. All right. Well. Hey, what's up? Do nothing. Hello. Hey, right back to you, and waving as well. All right. So, let's first talk about what's in the description box first. So if you guys are not familiar with how we begin our live streams, make sure you guys are always reading the description box first. Try to read everything from top to bottom so you guys understand what we're doing for tonight, and for any other information you guys can find it in the description box down below. So first of all, the title says while volatility shakes up the market, right? And now you need to expect this to happen. What is this that we're going to be talking about? Well, we will be talking about it in a few short minutes. So today was clearly an indication that we had a large pop in the market volatility, or market vol. So there's a market vol expansion. So let me actually go to the right chart here. So the S&P 500 had a huge range, right? So we opened up at 541.35, and then we hit a low of 537.45, and then we hit a high of 547.46. So just the range from the highs to the lows of today was quite crazy, right? Excuse me. It's literally nearly a 10-point range, right? Quite literally. And so, it's amazing to see that we've been getting these large price ranges, these wide spreads on every single trading day. But the culprit is the VIX, right? The volatility index of the S&P 500. And I've cautioned to you guys that we need to be looking out for the VIX, which we saw popping last week, right? I really told you guys this multiple times, and that we need to be looking out for a potential market vol expansion. Especially, I believe I started saying this back in mid to late May. So, I'm glad that we were able to see that this big pop in the VIX finally. However, I am a little bit concerned that the VIX has been kind of being comfortable staying over the value of 12 to 13. So if you guys remember, VIX has been finding itself a nice ground, nice support around 12 to 13, the values of 12 to 13, and that's usually when the market is consistently heading up higher. And so for the fact that we're now popping up higher and now getting very close to that value of 20 on the VIX, which usually indicates that there is some sort of a market correction underway, I am a bit concerned. However, obviously the VIX also just literally tells you that there is a big expansion in price volatility, and that's exactly the reason why we saw such a huge, nearly 10-point range in the S&P 500 today, from the lows to its highs. Now, it's definitely shaking up the markets, and unfortunately today, the S&P 500 has closed below the daily 50 SMA, this dark blue line here that you guys can see. Right, oh, there goes my TA here, right? Let's lower the music down here as well. So this daily 50 SMA is currently closed at 541.91. Okay, is my sound going on and off? Hopefully not. Let me see. Let me make sure I can hear the backdrop sound here. Yeah, the playback audio sounds good to me. It might be just you, Joe. Maybe you might need to just refresh the live stream. Hey, what's up, guys? Welcome in. I just began. Make sure you guys are hitting that like button down below, and make sure you guys are subscribing if you are new. Okay, I think we are good here. It comes in waves. Maybe it might have been the background music here. Hopefully it's not the one that's causing the problem. But hopefully everyone can hear me now. Okay. It's better? Awesome. Glad to hear that. Alright, let's make sure. Alright. Are we good? I think, hopefully everyone can let me know in the chat, in the live chat, if you're good to go with the audio. Everyone, please. Oh, there we go. I see your guys' reactions. Sorry, I think I just saw one pass by. Oh, there we go. Alright, so as I was saying here, so we've had a pretty rapid drop the past like a week and a half almost. So if I go from the perspective of the all-time high print so far, and if you go trace down to our current closed price today, we are at around negative 4.70% from the highs. And do you guys remember what I was saying and what I've been saying for quarter 3 if we do see a nice small correction? Well, I first said that we should be seeing a shallow correction of at least 5%. Right, textbook 5% correction. It's going to be a very quick move to the downside that will also be quickly bought back up. So it's a very quick corrected dip that becomes quickly bought back up as we form a nice intermittent bottom. And that's exactly what I said. And then on top of that, all right, I said that, you know, it doesn't really matter if we have a 3 to 5% or 4 to 5% move. As long as we have that textbook 5% move lower, we should be good to form a nice intermittent bottom that buyers can quickly lap up at a bargain price and then head on up higher and most likely have a nice V-shaped recovery. And so far, the price has been hitting all of the levels that I've indicated and I've shown you guys for the past couple of months. For example, 550 has been hit, 540 has been hit, and eventually I'm going to be expecting, at most likely tomorrow, 536.50 or simply 536 to be hit. Okay, so all of these levels are officially retested now, but obviously the price has broken below all of these levels, so there are now new levels of resistances. However, I really want to see a nice kind of a washout move tomorrow, where we see just one last big move to the downside, where we break below 536.50 or just simply 536, which will also, if you guys remember back in early to mid-June, so specifically June 11th to June 12th, we've had this nice gap up. Hey, what's up guys? Welcome. Whoa, we got another subscriber here. All right, we're only 7 subs away from 400. Awesome. We've been growing pretty rapidly here. That's good to see. So the S&P 500 here, so it's what you guys are seeing here, and what you guys should be looking out for, is eventually a retest of 535, which again, I am completely going to expect to see that happening around 535, tomorrow at 535. However, if we do see a little bit more weakness than what we expect to see, there's also a very good chance that that quick washout can lead into a very quick further sell-off into that previous resistance level that we were looking at, that's sitting at 532.50. Now if you guys remember, I gave you guys a nice range between 524 to 532.50. So if you guys remember, 524 was the all-time high level, resistance level, that we formed back in late March to early April. And then 532.50 was the all-time high resistance level, or just an overall level, back in late May. And we're able to see a nice demand area forming as the price continued to whipsaw back and forth in range trade between 524 to 532.50. But eventually, back in late May to early June, we saw that quick snapback rally to the upside as we stayed within this nice range. But ultimately, we ended up breaking over 532.50, and we used it as a level of support, as seen by all 5 or 4 of these candlesticks. Well, I guess you can say 5 if you include the intraday time frame price action on this specific candlestick, on the actual initial breakout candlestick. But you guys get my gist. So there is a chance that we can be literally using 532.50 as a magnet level. But again, if we do see a bunch of just straightforward, very quick, a nice washout sell-off to the downside, we can see a complete shift in momentum, a complete pivot in momentum and sentiment once we have finished filling in this gap up area, and that will be around 536.50 to around 536. All right, again, we don't need to be looking at this precisely. Obviously I'm not going to be looking at 537, right? Since that was the high of this candlestick right before we got that nice gap up on the next day on June 12th. So for the price to be able to have a nice washout, we need to be able to at least move a little bit lower than the actual exact precise price level of 537, or the high of this candlestick here on June 11th. So what you guys need to be focusing on tomorrow is to be expecting at least, quote unquote, the final day of a move down before we see that very, very quick pivot back to the upside, where we can most likely see a nice V-shaped recovery. So something like this, right? Okay, something like this. All right. So the reason why I'm actually looking for a V-shaped recovery is that, number one, this move down, this nearly 5% textbook move down, has been very, very quick. Let's even count the days. 1, 2, 3, 4, 5, 6, 7 trading days. So exactly 1 week's worth of trading, where we've seen a nice 5%, nearly a 5% pullback from our current all-time high price print of $565.16. And again, just to remind you guys, I told you guys that in quarter 3, we should be getting a very quick but shallow corrective dip that is at least going to have a nice, minimum 5% textbook correction or corrective move. And so far, we have been absolutely on point since we have had a nice negative 4.70% move from today's official close to the actual all-time high price print. Does that make sense, guys? All right, do you guys see this right here? So far the markets have been doing exactly what I predicted and literally just analyzed from the daily time frame of the S&P 500, right? It can be as easy as this, guys. Right, just using one specific higher time frame and seeing what can occur, and using a multitude of other factors like seasonality trends and other technical aspects that I like to use on my own charts. Right, so now to give you a little bit more of a reason why we tend to, why I want to see a nice V-shaped recovery back to the upside is that, well, again, very quick drop off, a very quick washout move to the downside, a nice 5% textbook correction. But at the same time, during this 5% correction, what else have we been seeing, guys? I've been talking about this for the last couple of weeks. Very, very textbook money and sector rotations. And as we're seeing sector rotations, specifically money rotations as well, we're seeing some very good relative strength going into other defensive and laggard sectors, and obviously market caps as well, specifically small caps and mid caps. And so basically it seems like the rest of the market is finally catching up to what the overall markets like the S&P 500, which again is the benchmark to look at for the broader markets, has done since last year's low back in October. Right, again, if you guys remember, I believe we're up over, I think around 40% from the current all-time high price print, if I'm not mistaken. And so, it's a huge move, and the lagging groups of the overall markets are finally moving, all the while the actual broader markets, or the benchmark for the markets, the S&P 500, has been moving down and has almost hit negative 5% for its corrective, but very quick corrective, shallow move to the downside. And so that clearly indicates to me that there is most likely a possibility that tomorrow, right, at the end of this week, we can be seeing again a very nice, quick washout of sellers where we see a big move down as we see the last amount of shorts taking profit. And then we see a wave of buyers coming in to defend the line in the sand, which is this 532.50. If and only if we do get back to 532.50. Again, I really just want to see the buyers coming in to hold this gap fill area down, right? Again, this is the previous gap up area that I just talked to you guys a couple minutes ago. And so I do want to see at least the price being able to hold around 536 to 535. So 535 is going to be the max. Again, however, if we do see more sellers coming in at 535, then the price is most definitely going to want to hit and retest 532.50 as the level of support, and then have a very nice quick pivot back to the upside, starting this V-shaped upwards move or recovery move that I want to see. Now, as long as we're able to see this V-shaped recovery move back up, we should be able to retake the daily 50 SMA, which at that point we should be seeing. Let me see. Let's take out my marker here. Oops, I think it's over here. Oh, no. And my highlighter. There we go. So the dark blue line here, right, should do something like this. Right, and as we're doing this, as the daily 50 SMA begins to flatline, the price will continue to recover back to the upside, and eventually we'll have to retake the daily 50 SMA and use it as a new level, a new area of SMA support. But for now, since the price is staying below it, it's using it as an area of SMA resistance. So as we're moving to the upside, and if we do see this V-shaped recovery move back to the upside, we'll have a lot of hurdles to get over, especially this daily 50 SMA, right? But at the same time, there is another level to be worried about that can converge with a flatlining daily 50 SMA, and that is the 542.50 level. So this one is not too significant in my eyes, but if we do see this V-shaped recovery move back to the upside, it will matter because I'm expecting my daily 50 SMA to literally starting to flatline here, and at that point I will also want it to converge with this previous support level at 542.50. Does that make sense, guys? Hey, welcome guys, I see more people coming in. What's up, what's up? Make sure you guys smash the like button down below, and also if you guys are new here, make sure you guys hit that subscribe button by the end of this live if you guys enjoyed this technical analysis and all the applicable information that I gave you guys in this live. Alright, so make sure you guys hit that subscribe button if that is indeed the case. Alright, so the S&P 500, definitely 542.50 will be a hurdle on top of the daily 50 SMA flatlining, and it'll be a perfect area to converge with this level here for the daily 50 SMA, so that I can add an extra layer of resistance, which can also at the same time, it may sound bad for the buyers or the bulls, but it can create a lot more concentrated energy or sentiment to build up right underneath 542.50 to create more of a blast off recovery to continue to go back up higher and potentially come back to that upper resistance range level at 550. If you guys remember, I told you guys this I think 3 weeks ago at this point now, but I've highlighted this 540 to 550 10-point range that the market is most likely going to use in the next couple of weeks or even until the end of quarter 3. And so now, you know, I'm taking this a little too far now, but just from a personal speculative take, if we do see this recovery back to the upside and potentially even retest 550, so if we do hit 550, we'll be partially, you know, less than 20% of this large gap down area will be filled at that point, and most likely we will be seeing a rejection at 550 because of the fact that we have this nice large gap down area that we saw back in Tuesday to Wednesday, okay, of this week. Oh, again, which was yesterday, and we should be seeing a nice rejection at 550. And once that occurs, all right. So now this is a bit speculative on my part, but for the rest of quarter 3, we could be seeing some nice sideways price action in between this nice 10-point range of 540 to 550. I even highlighted this back around 3 weeks ago. So if you guys remember that, make sure you guys give me a like down below, right? So far, the price, again, to summarize everything, in short, the price has been following every single one of my analysis, every single one of my predictions, and every single one of my levels that I have drawn out on the daily time frame and all of my other higher time frames, or even on the intraday hourly time frames. So again, just for now, focus on the fact that we should be looking for another quick washout session either tomorrow morning, early tomorrow morning, and then somewhere around the next hour or two after market open, we can see a very quick flip to the upside, and you can see a nice pivot somewhere around 535. But again, if you don't see that, again, 532.50 will be that level for the price to retest, right? So that we can have a nice pivot back to the upside and a quick momentum and sentiment shift on the intraday markets, right? Now, again, the only reason why I'm saying that this can happen is that, well, today was a very clear example of what market vol expansion can do, right? Along with negative gamma, if you guys know what that means in the options market, right? So if you guys don't know what that means, just search up negative gamma on Google and you'll see what that means. So it's a condition, it's a market condition environment of negative gamma, and also a nice big expansion in the overall market vol. So this is definitely going to be something that can definitely play out tomorrow. I can definitely see a very quick red to green move, just like what we saw today, where we had a nice red to green move as well. But you just need to be prepared for anything. So make sure you guys do have your actual game plans ready, your entry, your stop loss, and your profit targets, right? If you guys are looking to day trade tomorrow, or especially if you guys are looking to swing trade, or at least execute a swing trade heading into a weekend, right? So again, that's exactly what I want to see. This is what I expect to happen as we start to see market volatility continuously shaking up the markets, especially as the VIX comfortably stays near that value of 20 that I just talked about. All right. So hey, what's up, guys? What's up? 8 likes. Let's go. Oh, we got another subscriber. Nice. It looks like we're about to head to 400 by the end of this week. Awesome. Again, we've been growing pretty exponentially here. Looks very good. So the VIX here definitely looks great for market volatility. That's it. All right, obviously for the longer term bulls or anyone who's very bullish, it's not looking too good for them, since market vol is never a good thing in the short to mid term. However, again, we just need to look out for the VIX being absolutely crushed as we head into next week as well. And if you guys didn't know, next week we have the FOMC meeting, right? Before the Federal Reserve decides to take a break in August, and then we have our faithful September FOMC meeting, where we are now literally expecting our first rate cut, our first official rate cut from our current highs that we are in for the overall federal funds rate, or the benchmark interest rate. They're both synonymous terms, right? So with that being said, okay, let's take a look at IWM, right? So I also talked about this earlier as well in the live stream. And so if anyone is just coming in now, you guys have to watch the beginning of the live. I have talked a lot of important stuff in the beginning of the live, so make sure you guys go ahead and watch the recording if you guys have just come in to this stream. All right, so IWM I have highlighted on Tuesday. I quite literally made this chart pattern on Tuesday. All right, I specifically said that we should be expecting some sort of a Momo bull flag chart pattern forming on the daily time frame, and guess what we did today? After I have drawn this descending resistance trend line and this ascending support trend line on IWM on Tuesday's live stream, we have respected both of these two trend lines to a T, right? The price itself is continuously adhering to the parameters set up by these two trend lines. And on top of that, if you guys remember what I said last week on Friday, when we were able to roll up into new longer term expiration contracts, longer dated contracts, same thing, you guys get my gist. We were able to see that the daily 10 SMA was quickly catching up as the price pulled back into this 216 previous resistance level, and also one of our very first profit targets for IWM. And we're able to hold this 216 area as a new level of support. And then come Monday of this week, we had a nice large bounce to confirm that yes, we do want to use 216 as a level of support. And then on Tuesday night during the live stream, I said that the price will most likely want to come back down to retest the daily 10 SMA as it continues to curl up higher. And that's exactly what we did yesterday. And then come today, we also broke over and reclaimed the daily 10 SMA and closed over this daily 10 SMA, further proving the fact that we are forming this nice daily Momo bull flag, right? And again, just to put the cherry on top, this very good trend lines that I've drawn here, the price is adhering to the parameters set up by these two trend lines. And also it seems like the price literally quite literally wants to follow this price path structure that I've drawn on Tuesday night as well. So make sure you guys also have this on your own IWM daily time frame charts. It'll be very, very helpful. But again, the only thing that I am worried about is that the daily 21 SMA is still far behind, because the daily 21 SMA is still staying around our very, very first profit target at 210 if we were to break over 205. Right, so 210 was the, if you guys remember, was one of our, well, it was the exact first profit target or goal for a breakout move to the upside for IWM. And so with the daily 21 SMA staying over 210 and still kind of sticking around this 210 level, makes me a little bit worried that this bull flag, this Momo bull flag or momentum bull flag, can be invalidated if we do see continuous sideways price action. All right, so you guys need to be ready to quickly adapt to that if you do not see an immediate breakout from this momentum or Momo bull flag. Right, but that, again, if you do decide to move sideways, do not be worried. All that means is that the price is waiting for the daily 21 SMA to finally catch up, and who knows, maybe once the daily 21 SMA has caught up to around 216, maybe the price will be so tight and just squeezing so tightly to the point where it will finally break out to the upside and continue to head on up higher until we hit a new higher high pivot point. Because again, we have yet to overtake our current pivot high point, sitting at $226.64. Does that make sense, guys? Right, so again, IWM, really great relative strength. We're continuously seeing big pops in buying volume down here that you guys can see as we are consolidating and completing this Momo bull flag. So make sure you guys are clearly understanding where I'm coming from and what I am seeing on the daily time frame. If you guys don't see what's happening here, make sure you guys DM me on Instagram at ChartsFocus1 or on Twitter or X at ChartsFocus1. I have the same handle for both of those two social media platforms. All right, okay, so that is it for tonight, guys. Hopefully you guys really found this information informative and most importantly applicable, especially for tomorrow and for the last week of this month, right? The last few trading days of this month as we head into the middle of quarter 3 and also the first trading week of August, right? So again, make sure you guys are watching the recording over and over again if you guys need to, and make sure you guys are understanding what you guys should expect to happen based on the technical analysis that I provided you guys tonight for the overall markets, the S&P 500 or SPY, and for small caps or IWM. So these two market caps are literally going to be my focus for the rest of this week and into the rest of the month of July. So hopefully you guys can do that for yourself as well and follow me along during this journey of always trying to figure out where the markets are at and where the money is flowing to. Okay, now before I finish this live stream, make sure that well, I am here to remind you guys that if you guys want to join and become a member and a reader of the CFO Stream Watch report that comes out every single Sunday night, along with a private technical analysis video that usually spans from 20 to around 30 minutes, make sure you guys DM me on Instagram at ChartsFocus1 and you guys can get 50% off for your first 30 days. All right, it'll be very worth excuse me guys, it'll be very worth it. Excuse me guys. So again, if you guys want to join and become a reader of the CFO Stream Watch report and also become a member of the private CFO Discord community, make sure you guys DM me at ChartsFocus1 on Instagram and you guys will immediately get a 50% discount for your first 30 days. And again, it will be worth it. You guys will be able to learn quite a lot of new stuff on the very first week that you guys receive the CFO Swing Watch report. And also you guys will gain a lot more experience on how we do things and how we swing trade in the private CFO Discord. So you guys do not want to miss out on all the potential opportunities that are brewing and that we are currently observing and watching out for the rest of this week and also for the rest of this month. All right, so that is it for the live streams for this week. I'm glad to be back. We've been killing it. This channel has been growing exponentially. It seems like we're about to hit 400 subs on this channel by the end of this week, hopefully. And I'm just trying to stay positive. So if we can even get to 500 by the end of August, that'll be amazing to see as well. And we will do a little bit of a giveaway at the 500 sub mark. All right. Okay, well, I'll see you guys next Tuesday at 8:30 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And yeah, have a great rest of your night. Thank you so much for watching and good luck tomorrow.